If we trade M and W formations, also known as double tops and double bottoms, these are three rules that you must apply to give you the highest accuracy when trading M and W formations. So if you're struggling to identify the right M and W formations to trade, I don't know what to do whenever you see the pattern, I'll be breaking this down for you and showing you step by step how to trade these M and W formations with high accuracy. If you're not subscribed already, make sure to subscribe and let's get started. What are the rules for trading M and W formations? The first rule is M and W formations must be at the high of the day, the high of the week, the high of the month, or the high of the year. This is very, very important because this is what's going to help you identify the right M's and right W formations to trade. If not, if you don't take this one rule serious, if you don't follow this one rule, you're going to find out that you're going to be seeing a lot of M and W formations everywhere. For example, you might just be seeing, like I said, when you have a consolidation like this, you might say, okay, maybe this is an M, or this is a W formation here, or is this an M formation here, or W formation here. You're gonna get confused, right? And this is the one rule that's gonna clarify everything for you. The M and W formation, double top, double bottom, has to be at the high of the day, high of the week, high of the month, high of the year. If it's at the high of the week, high of the month, and high of the year, automatically it's gonna be at the high of the day. Automatically, like it's just automatic. So the M and W formations have to be at the high of the day. The high of the day or low of the day. If it's an M formation, it has to be at the high of the day. If it's a W formation, it has to be at the low of the day for it to be valid. Otherwise, that M and W formation is not valid. For example, let's say the day starts here, and then you have maybe price does all this, and then price comes here. So this is the highest point for the day, and this is the lowest point for the day. And then all of a sudden you're seeing an M formation here like this. This is not an M formation. Or maybe you get a W formation here like this. This is also not a W formation. If this is the high of the day and this is the low of the day, price is at the middle, that is not a valid M or W formation. But if this is the case instead, while price is trying to form the high of the day, it gives you an M formation at the highest point here. Now this is a valid M formation, or maybe if price give you a W formation down here, this is a valid W formation. Why? Because this is at the high of the day and this is at the low of the day, so they are valid. So make sure to follow this one rule when trading M and W formations. If it's not the high of the day or low of the day, it is not an M or W formation. It's not a valid M or W formation. The second rule that you should always follow when trading M and W formations to increase your accuracy is try to enter before they break the neckline. Try to enter before they break the neckline. Here's an example of that. Now, when you're trading M and W formations or double top and double bottoms, the most common way of entry is to wait for it to break the neckline. So you get something where you get your first leg, you get the neckline, you get your second leg, and then price goes down like this, right? We know what the neckline is. For those that don't know, this middle part of the M formation is the neckline. The middle part of the structure is the neckline. So usually they'll tell you to wait for price to break the neckline and then you enter when price breaks the neckline and then you put your stop loss above and then hold it. Right? But here's the thing. This is gonna affect your risk reward. You're not gonna get clean risk rewards. You're not gonna get up to like a 1 to 3. You're usually gonna get like a 1 to 1, 1 to 2. But if you want to increase your risk reward, you need to enter before they break the neckline. By the time they're breaking that neckline, it's already too late. It's already too late. The only way you can manage to enter when they've broken the neckline is if you wait for like a retest for price to come back all the way up here, then you enter on the retest. Otherwise, if price just breaks out of this and you're entering here, you're already too late. Usually, price breaks out with a big candle, and that's going to increase your lot size, especially if there's an M. Sorry, that's going to increase your risk reward, especially if the M structure is big, because you know you have different sizes of the M and W formation. Sometimes the M might be a tiny M formation like this. In that case, the break of the neckline would not be too far from the high. But if it's a big M formation, then the neckline is going to be far from the highest point, which is going to bring you to number 3. Your stop loss should be above the structure, right? Your stop loss should always be above the structure or below the structure. If it's a W formation, your stop loss should be below. If it's an M formation, your stop loss should be above, right? So that one is a basic. Like if you're putting your stop loss inside this area here, you're gonna get stopped out because price could just come back. Let me change this to a price could just come back like this and then maybe dance around and then move in the direction that they want to go to. And then if your stop loss is here, if you go and put your stop loss somewhere in here, you're going to get stopped out and the trade is going to go in your direction. You do not want that. You want your stop loss to be above the structure. And the reason why your stop loss is above the structure is because once price breaks above this structure, then you know that the M formation is no longer valid because whenever price breaks above the M formation like this, that invalidates the M formation. If it's a W formation, it's the opposite. It's the opposite of that. So going back to number two, which is always wait for the always enter before before they break the neckline, you should be inside the trade. All right. So, not to interrupt, but if you're interested in ways of trading bigger capital, let me introduce you to the sponsors of this video, Blue Guardian. Blue Guardian is a prop firm. In case you don't know what prop firms are, they are firms that provide you with capital to trade. You trade, then you and the firm share the profit. Blue Guardian has been in the prop firm industry and they have been around for 3+ years since 2021. With them, you can get funded with capital from $5,000 all the way up to $400,000. They have a 1-step, 2-step, and 3-step challenge accounts to choose from. They also have an instant account in case you're not a fan of trading those challenge accounts. And since I'm partnered with them, you can get an account with them for a discount. So make sure to use the code DAN32 to get a discount. As always, click the link in the description below to get an account with them. How do you enter before they break the neckline? What you do is you use candlestick formations. You have your M formation like this, right? By the time you're waiting for them to break this place, it's a technically correct entry, but it's too late. I want it to be inside the trade before they break the neckline. It should be in somewhere in here or around this area. All right. And how do you enter like that? You use candlestick confirmations as your entry. So whenever price goes back to this high of the day, which is the high of the M formation, and then we test it, you're looking for a candlestick formation. The 3 candlestick formation that you should look for a star formation, a railroad track formation, and an engulfing candle. Those are the 3 main candlesticks that you're going to see at this high. That's going to be the signal for you to enter. So whenever you see those candlestick patterns inside here, once price gets to this high, you can enter that trade safely. You can safely enter the trade. I know some of you might be scared entering at this high. Do not be scared. You shouldn't be scared of anything. Worst case scenario is that they'll go and hit your stop loss, which is you should be calculating your risk. You should have proper risk management, which is what I'm gonna show you how to do at the end of the video. So you should use a proper lot size. You should use proper risk management. So enter at this high. Don't worry about it. The trade is gonna work out. It's going to give you a good risk reward. You can get a 1 to 3 risk reward or 1 to 2 risk reward. You can even get sometimes a 1 to 4 risk reward, depending on how tight your entry is and how big your surplus is also. Right. So you should be entering the trade before they break the neckline, and then put your stop loss above the structure. And this should be the high of the day, high of the week, high of the month, high of the year. And that's a valid M or W formation. Now, when it comes to calculating your risk, you need to use the right lot size. Some of you are having mistakes. You have problems when you're calculating your lot size. The way I calculate my lot size, I use a lot size calculator. Sometimes when I'm entering on my laptop, I use it on my laptop. I use the one on my laptop. But most of you trade with your phones. So if you want to calculate your lot size with your phone, you have to use the lot size calculator app. I mean, you can calculate it manually with a calculator, but you need to know the formula. You need to do all those things, and before you know it, the trade has gone in the direction that is meant. Like the trade has already gone before you could enter that trade. So in order to avoid all those things, also you could also make mistakes when you're calculating it manually. Maybe you're meant to use one lot and you end up using like 0.7. You're not going to get the same dollar amount when the trade goes in your direction. So let's say I see an M formation like this, right? And I decide, okay, I want to enter this trade. What I'm going to do is I'm going to calculate my lot size on my phone, go on my phone, calculate my lot size, and then enter the trade. And how do you calculate your lot size? You need 3 things. You need your lots, you need your stop loss, you need to know how much you're risking per trade, and then you need the currency pair that you're trading. So let's say, for example, on this GBP I want to enter a trade. So the app that I use to calculate my lot size is called Stinu. Let me show you how I do it. So what I do is that when you open the Stinu app, this is what's going to show you. You're going to see account balance, you're going to see percentage, and you're also going to see the stop loss size of the trade that you want to enter. So what you want to do is put the account balance, let's say it's $1,000, and we're risking 1%. We're going to have to find out the size of our stop loss. So what we're going to do is we're going to go back on the trade here. I'll say, okay, what's the size of the stop loss? Let's say we're going to use a 20 pip stop loss. Let's say this is a 20 pip stop loss. We're going to come back here on the app and we're going to put a 20 pip stop loss, and we're going to click on next. And then choose the currency pair that you're trading. The currency pair that we're trading here is, you can see, is GBP USD. So you're going to put on your GBP USD, GBP, and USD. And then you're going to click on next. And it's going to help you calculate your loss size. It's going to show you all the loss size, the list of the loss sizes that you can use for the 20 pip stop loss, 10 pip stop loss. What I like about it is that it shows you 20 pip stop loss, which is one we chose. And you can also see 21 pips, 22 pips, 23 pips, which is good because sometimes when you're about to enter a trade, maybe the stop loss is 20 pip stop loss. But when you want to enter the trade moves maybe like 5 pips, and now it's a 5 pip stop loss that you need to enter. So that way, with this list, you can enter the trade quickly because you need to be in that trade before the trade moves in your direction. Otherwise, it's going to affect your risk reward. So if you guys want to get the Steno app, you can scan the QR code on your screen to get the app. The link is also going to be in the description below if you want to get the loss size calculator app. Make sure you join my free Telegram community. The link is going to be in the description below. And if you want to learn my trading strategy, the link is also going to be in the description below. Peace.